Hey, everybody. My name is Chandler Thomas. I want to first welcome you to Trade House Investment Group. I'm excited for you guys to start your trading journey. So let's get to it. Today, we're going to start off on the basics. So the first thing we're going to start off is kind of figuring out how to navigate MetaTrader 4. Let me pull it up. So you have it on your phone right now. MetaTrader 4, it looks something like this. All right. You see that? So the first thing you want to do, you want to be able to, you want to add different currency pairs. You want to add everything up. You want to set it up. So you'll have, first of all, you need to go to your settings. You want to add an account. Settings is at the bottom, right? Or for all my iPhone users. Then you want to hit new account. You want to first you want to start out with the demo account. You want to start a demo start. So you hit start with open a personal demo account. Hit open personal demo account. Hit, Trader's Way, Hugo's Way, JFX, whatever, it doesn't matter because it's demo. Then you wanted to actually open a brokerage account and start your live account, which I can walk you through personally and make sure you help that. So if you have any questions on that, let me know. I'll plug you in with that. So once you add, you log into it and add your actually real account, you see Hugo's Way is what I'll be using. You click on that once you put all your credentials and information in. And then you want to hit quotes to the far left, quotes right here, far left. And from there, you want to then hit the plus sign, the top right, go to Forex and add them all. So you see that green plus, you want to add every single one. So let me start over. Let me do a brand new one. New account, start. You want to add all of them, bam. So they'll start pulling up here. You'll start seeing a list of them coming up here. All right, you'll see all the lists. You see. So what a currency pair is, two different currencies. And let's say you want to do the euro to USD. So you're essentially trading 1 euro for 1 USD. Euro is European dollar, or European, the euro, and then USD is the US dollar. So what are you essentially doing? You are trading 1 euro for 1 USD. So let's go up here, euro USD. So right now, the euro to USD is, it's 1 to 1.745. And you'll see actually below it says a spread. That's what the brokerage is charging you for that right now. That's the difference between what current price is and now what the brokerage is charging you at that particular time. So, and the spreads do change depending on, the price and everything as price moves. So then you want to hit that. So then you hit that. You'll see there are 3 different bars. Let me see that. So trade, chart, and then details. If we were going to trade this pair, the first thing, obviously, you would hit trade, and then you come to this screen. The top is going to tell you what currency pair you're in. Right below that, it's going to tell you your lot size. So what a lot size is how much you're betting on that currency pair. So for example, let's say you have 0.01, which is the smallest lot you're allowed to use. And for most people, especially new traders, I advise you to use this lot size because it's very safe and it's the lowest risk. So let's say 0.01, type it in there. Then you're going to have your stop loss. Stop loss and take profit. Your stop loss is your risk management. Your risk management, all right? That is the amount of money you are willing to lose. Then you have your take profit. That is the gain you're willing to gain. So I technically tell all my people is to do 2-to-1 ratio risk to reward. So everything, let's say you're risking $1. That means you're going for 2. If you're risking, $4, you're going for 8, so on and so forth. So where do you get these numbers from? So as you're starting off, you don't know what trades to get into. You don't know all the different things going on. So let's say, so make sure we're going to plug you into all of our Telegram channels. One of our Telegram channels within Telegram, which is all our signals, is Push 1000. So Push 1000, let's say, what's the last current? Let's see the last signal they drop, right? So they drop a signal. What a signal is they'll send you these numbers to your phone. See, it says sell Great British pound to the Australian dollar, market execution. Market executions mean you're jumping into the trade immediately. Then it says it gives you their stop loss and your take profit 1, 2, 3, and 4. What that is, take profit 1 is smaller risk, smaller gain. Take profit 2 out a little bit more gain, a little bit more risk. As you keep continuing going all the way up to TP4, that is the highest risk, the highest reward. Remember that. In trading, when you're willing to risk more, you're essentially willing to win more. But let's be smart, guys. Let's make sure we're doing proper risk management, keeping within your proper lot sizes, that you're not over leveraging, which pretty much means you're putting too much on a trade before, based on your account. What we say is proper risk management. For every $100 or no $1,000, the 0.01 lot size, $1,000, 100, my bad, every 100, 0.01. So up to 1,000, you go to the 0.10 at 1,000. Proper risk management per trade, per currency pair. So next, let's see, next. We didn't call the signal. Let's say great for this one right here, GBP AUD market execution. So we'll go back to MetaTrader 4. We'll search it up, GBP AUD. We'll hit it up there. You'll see at the top, GBP AUD. Put 0.01 in. We'll type in our stop loss, which is, go back here. Stop loss is SL right there.
It's 9 o'clock.
We got stop loss of 1.8, 1015. And then we have a take profit, take profit 1, which is back right here. Take profit 1, 1.1, 1.81, 015. And because it says sell market execution, we're going to make it so that it says market execution at the top, and we're going to hit sell right there. Hit sell. And we can change it. So when you tap onto market execution, you have a few options. You have buy limit, sell limit, buy stop, sell stop. And we can break those down to let you know a little bit more about those as we go to the next training. So then you have placed your first trade. So once you hit buy or sell, you're good to go. You've officially placed your first trade. So now when you're looking for these signals, you want to make sure you're within 15 to no later than 30 minutes of a signal being called to enter as a newbie, because you do not want to enter a trade that's getting ready to already hit take profit 1, 2, or 3. That means you're too late. So let's be aware of that. We kind of went over currency pairs. So currency pairs obviously is you're trading one pair for another. So you're trading €1 for $1 USD. So the price for, let's say for simplicity, the price of €1 is $2 US. So that'd be a 2-to-1 ratio. You're trading €1 for $2 US. As price increases or decreases, it depends on if you're going to be in a buy or sell. Let's say you're trading euro for USD and the USD plummets. So the value of the US dollar goes down. So now your euro is worth more US dollars. So what do? When you're trading over, you're gonna sell high, buy low. Sell high, buy low. what you're essentially doing, you're selling up here. As the price goes down, you accumulate more US dollars. Let's say vice versa. You buy down here, you buy a lot, the price goes up, you accumulate a lot more US dollars from that Euro USD pair. So next, we want to add or delete pairs. So simply, from here, we showed you how to add pairs with that plus sign right there. Simply delete a pair. You want to click it. Oh, click right here. And you can move them around. I personally like to organize them alphabetically. You just hold this button right side, drag it up and down. Or you can tap this side one and delete it. Let's say you don't like that pair. You don't ever want to trade that pair. Let's say it's, you don't want to see that pair again. You can delete the pair. Hit that, hit trash can. It's gone. Start. So next, what we want to do, we want to talk about candlesticks. And what are candlesticks? What do they mean? What do they look like? So what I'm going to do, I'm going to start sharing my screen. Give me 1 second. Let me share the screen. So we see this right here, guys. See these charts. What do these charts mean? So let's look at what a candlestick is, what it's doing, what a wick is, all that stuff. So we see this right here, guys. It might look like Chinese to you guys right now, but let me break it down, kind of the gist and simple. So you see these things right here. We call these candlesticks. Make it a little bigger for you guys. So we call these candlesticks because they look like candlesticks. We have a huge body right here, and then we have the wick. The wick right there. Huge body, then the wick. The body and the wick are showing where price started and where it finished. Where it started, where it finished, where it started, where it finished. You know, where price, majority of the price is at that point, where the price is moving to, what is going on. For this long wick, we see price tested all the way up here, but only held this much weight. This is where it really was at. It wick that showed up, went up there, and was like, oh, I don't like this price, let me come back down. So candlesticks are pretty much telling you where price has moved to. So we see, let's move over here. Price went all the way up on this bullish move up. Bullish move means bulls mean they're going up. Bears mean they're coming down. A good way, like I like to remember this, bulls have horns, they go up. Bears have claws, they come down. So to kind of a little bit understanding of what these candlesticks, so you see how the price tested all the way up here, but only held this much. This movement right here. This is where it held. Then you see it coming down. So you see prices moving down, down, down. So what it's pretty much saying is that price was here at one point. This is how much price was the euro to USD, that currency pair. How much a euro to how much each one was worth compared to the other, and then we see the price went down. So obviously the USD got stronger compared to the euro. The US dollar got stronger compared to the euro because it went down. It went down. That means the USD got stronger. We also see this big old thing at the bottom. What is this purple thing? Let me explain it to you. So this is our RSI indicator. You can literally, let me just get rid of it, show you how to add it. And oh, side note, this is TradingView. You can get TradingView for free. Go to tradingview.com. I highly advise all you guys to get this. It's a great tool. Great tool. Let me get rid of this really quickly so I can show you how to get it. Okay. So on TradingView, you're going to go to top to say indicators, and we will be walking you through how to use TradingView at a different trading as well. So we're going to break down indicators. We're going to say RSI, Relative Strength Index. What is this is telling us is how strong the movement is in the market at that given time. So we want to set our parameters for this RSI. Let me make it smaller. So we want to increase our line so we can really see it. I like to have a really strong line so I know where everything is at. And then I do 70 and 28. These are 72, 28. What these are telling me is if the market is overbought or oversold. And I'll explain to you what that means in a second. So what it means, let's go over here. Let's see if I can find perfect. Right here. You guys see that? Oh, not this one. Sorry. So you see it right here, guys. The market was overbought. When it's above the 72 mark, so you see this line right here is the 72 mark. When it's above that, that means the market is overbought, meaning it's getting ready to drop. The market has the ability to go to 100, closer to 100, up to 100, but I've never personally seen it go. It's not going to completely sell off everything. It will drop before it hits 100, but it will get really high at times before it drops. But this is an indicator of saying the price is getting ready to come down. So you see right here, when it broke the 72 and got outside this zone, it started coming back down. It tested up a little bit more before it continued to go down. You see this right here? It will kind of fluctuate, but it's going to tell you when it's a good time. So when it's overbought, meaning it's too high up, it's a good time to start looking for sales. And if it's vice versa, if it's too low, let me see if I can find one. Oh, sorry. Almost. You see, it pretty much, so when you hit this line right here, you see it's overbought. So, or oversold. So oversold for bottom, overbought over top. Oversold at the bottom, overbought at the top. Completely oversold, always sold down in here. You see this, bam. Let me make another line for you guys. Line right about there. You see how it's over. You see how it's oversold. Bam. So what happens now? The market needs to recorrect itself. And then all this, they keep selling it off, selling. Eventually, people have to start buying it up. Because once you sell everything away, people have to eventually buy it back. It's all this. Give and take. That's what the market does. So you see all the way down here, now it went back up. So when you see it getting this low, it's a good time to start looking for a buy. And what I want to teach you guys is how to really trade on the naked chart. You see that there's not too many indicators, not too many things going on the chart right now. That's trading on a naked chart. It's kind of I advise everybody to read Naked Forex. The book is amazing. To kind of really break down all the tools and things like that. So let's talk about how to get in and out of a trade. So we talked about how to get in a trade. Let's talk about how to get out of a trade. So right. So let me place a fake trade real quick. I'm going to do Euro to USD. Excuse me, sorry, I'm getting over a little bit of a cold. Okay. There's not really much going on in the market right now in this pair, but we'll see if we can pull something up. All right. Let's just do act for accident. Let's say for accident you hit, this trade. You put it in, you hit sell. Second. You hit sell, went through, and you're like, oh no, I didn't want to be in that trade, or oh no, I like it, or oh yes, I like what I see, I want to get out of the trade. So what you want to do is you want to hold down on that. It's going to say a few different options. It's going to say close. It's going to say modify. It's going to say trade. It's going to say chart. So let's say you want to just get out of the trade, right? You're done. You're upset about it. You're like, I'm going to just close this trade out. You simply just hit close. Boom. Or let's say you want to take partial profits. Let's say you're in a good trade, but you want to secure some profits. The biggest thing about trading is always secure the bad. When you're up on a good trade, secure some profits, set a good, stop loss and take profit, and then get out. So let's say you want to just modify it. You hit modify. You can change your stop loss and you take profit. So at any given time, if you see something that's happened, you want to change it, you want to increase your reward, or you want to decrease some of your risk, you have all the the authority to modify trades. So that's pretty much it. So let's just say we want to close this out. Hit close. You'll say it's a close with the loss of 17 cents. No big deal. We'll close. Bam. It'll say poof, and it'll go away. That's how you get out of a trade. You can modify it. You can take partial profits. You can do kind of a lot of different things like that. So after that, we already learned how to set a take profit and stop loss. So what we want to do is do risk management, right? So risk management, like I said before, is we want to do only 1% of our account per each trade. What that means is, let's say you catch a signal, and the signal is shot out to your phone and Telegram, and they say get in Euro USD, at a sale, and they give you all the parameters. So what you want to do, for every $100 in your account, you only want to trade 0.01. So let's say you have $100 in your account. Essentially, you should be only using 0.01 lot sizes and not over leveraging, meaning you don't have 30 or 40 different 0.01s, because essentially every 0.01 is added up. So let's say you have anything less than 100 in your account, you should not be placing more than 2 to 3 trades at any given time. As your account grows and you start building your account up, then you have more access to place more trades at a higher lot size. I will be sending you guys the list of our risk management document. Just let me know if you need that, and I got you. So with that, we can kind of break down on that. Let's see. So lastly, we're going to talk about, let's say if you want to, they send out a signal in the group me, and you're looking like, I just got this signal. Let me get into this this trade. Let's look at, for example. So let's say, they say Euro USD for the buy, right? For the buy, and let's just say we're looking, all you see right now is this. So what you want to do, you want to wait you see it go up for the buy, you want to wait for it to retest down, so retest down for a buy, retest up for a sell. So you see how it retested up a little bit, came back down, you got in, you rolled it up. So you want to make sure you always wait for the retest. A retest is, once we'll teach you more as you jump into IML Academy, things like that, support and resistance. A retest is this. So let's say it goes up, it touches your resistance, which is your top, which is your ceiling. Let's say you're in a house. It's your ceiling, then it goes back down to the floor. A retest goes up, it tests the resistance, retests the floor. Goes up, tests resistance, goes back down, touches the floor. So you want to wait for the retest. So after it goes up, it come down, You're waiting for it after it hits down. You're going to get in for up for the buy. And as it goes, you're going to get to the top and go down for the sell. So up, down, up, down. So what else can we cover today? Let's see. And if you see a good retracement, feel free to jump in again, but use good, proper risk management. So if you have, you know, 0.01 lot size, you're getting in with the 0.01, you go up, make some profit, cash out, feel free to jump back in on the retracement as it goes up and goes down, but make sure you're watching the charts. So if you don't feel comfortable doing that yet, just take your time, mess around with the demo account. I highly suggest you do a majority of your trades on the demo account that you do on your own before you start risking your own money. And feel free to ask me any questions. My phone is wide open. Just, you know, plug in with me if you have anything like that. What else can we go over today? Let's see. We already went through MetaTrader 4. We already went over what are currency pairs, how to add and delete pairs, a brief description of, you know, of the candlesticks. I talked to you about the RSI of being overbought or oversold. If it's overbought, that means it's way too high. It's going to come down, look for sales. If it's oversold, it's too low. It's getting ready to buy, look for a buy. All right, yeah. So how to take partial profits. We talked about how you do that. How to set up a take profit and stop loss. We went through that as well. Finished out with good risk management and how to take a signal. And pretty much that's it, guys. So, you know, this is a brief basics training. Nothing too crazy. Just want to, guys, give you a good foundation to get started on. Once again, I want to welcome you to Trade House Investment Group. My name is Chandler Thomas, and you guys have a blessed day.